Hi, this is Kerry Artak with Wicked Stocks, bringing you your daily Tesla report for Tuesday, February 13th, 2024.
But before I walk you through the charts, as usual, just want to encourage you to please click like if you haven't already, subscribe to the Wicked Stocks YouTube channel, share the content if you would with friends and colleagues, and check out wickedstocks.com, where we offer a full suite of both daily and weekly analytical videos just like this one. Daily analysis in the SPY and the Triple Q, that is the S&P 500 and NASDAQ 100 ETFs. Weekly analysis in the S&P 500 index, the NASDAQ 100 index, the long bond ETF, the TLT, as well as 2 individual stock picks a week that you never see on YouTube. That is 8 a month that cater to the 3 to 5 week swing trader out to the 3 to 5 month near-term investor. We're always looking for at least 20% moves on those stock picks, and you can check out all of this for no cost for 5 days. We offer a 5-day free trial up front with a wickedstocks.com subscription. So sign up for wickedstocks.com, check it all out. If you don't like what you see within 5 days, you can cancel your subscription at no cost to you whatsoever.
Let's take a look at the chart. Start with the big picture. It's always useful to start with the big picture first, work our way into the day itself. The longer term time frames, the longer term undercurrents generally win the day. We came off that 255.60 month channel top about 6 or 8 weeks ago, and when we were testing it, we'd mentioned how the channel bottom at 171.79 this week should be considered in reach within 3 to 5 months or sooner. It wasn't really expected until we closed, I don't know, was that a month and a half ago? Below this 236.19 to 238.02 rising channel bottom speed line combination. Then it became a clear-cut objective, which we did test a little over a week ago. 172.61 on the daily chart is on the weekly chart 171.79. So we use the weekly chart as our basis, as our support. But you can, if you click through these charts, I don't know if you download them or not, but this is becoming kind of a wide zone. As you can see, we could probably add some minor points in here. But in any event, it is a big picture support, 177.25, a 5/8 downside Fibonacci as well from that January 23 low against the more recent July 23 high. We hit that. We hit the channel bottom on the daily chart, not so much on the weekly chart, but we fell within the 1% zone. And having done so, just the inverse now. The market inclined, or you should at least allow for a bullish rotation over the next 3 to 5 months or sooner back to the 255.60 descending channel top. Now, I see once again no clear sign for that, no clear predictive indication for 255.60 unless we were to close above 212.80 in the coming weeks. 212.80 had, past tense, been considered a 1 to 2 week target following the settlement last Friday above this 189.14. Simple textbook channel top. Descending flag at the base of a move. We closed above it. Was considered a meaningful buy signal near term over the next week or two to 212.80. But that wasn't to be. Yesterday, that is Monday, we did close back below this channel top. We also put out a key reversal high over the last week and a half, new pullback high following that low from a week and a half ago, closing then back below Monday's low, a bearish engulfing pattern, I believe, in candlestick speak. What did actually roughly contain the highs, and I'm opting for it now. As you notice, I don't even include 189.14 as a minor point, although you can have at it talking to aggressive day traders. But really, in terms of our new upward pivot point, that is the descending 1/3 speed line that did roughly contain buying pressures so far. We did open below it, push above it on Monday, certainly close below it. 190.59 is our new upward pivot point through the rest of the week and into next. So if we were to close above 190.59 today, Tuesday, then I do see quite possibly by the end of next week this 212.80 descending 1/3 speed line, which can absorb buying not only on a weekly basis, but quite possibly through March. We can fall away from here again back into the low 170s. In fact, this is the 3 to 5 week dynamic as I see it. Buying the low 170s, selling the low 212s, selling the low 212s short. That could be buying then at the point of testing 170 strike out of the money puts that don't expire for at least at that point in time a couple of months, 3 months out. If we fall back into the low 170s, which seems to be the course actually right now, I could say a little bit about that. Yesterday's couple of things here. The fact that we settled back below this channel top at 189.14 is in itself a sign of weakness. Failure to follow through on such a textbook buy signal is in itself a sign of weakness. I do see that 172.61 formation in reach now by the end of next week or sooner. We also put out a key reversal high. And really, holding below 190.59 maintains sort of an on the defensive posture as we move through the rest of the week and into next. I do see the 172.61 formation as likely again below 190.59, and that is once again on the weekly chart 171.79. Considered a 1 to 2 week target, possibly by the end of this week, holding below not only 189.14 but 190.59 in particular. Downside today, we've got Fibonacci levels mapped out. 187.20 is a 3/8, 184.87 is a 50%, and 182.54, which is close to the low settlement price, is a downside 5/8. I do think holding below 190.59, day traders, the 182.54 level is in reach today. We could get a nice bounce off of 182.54, possibly for the day itself, but I'm keeping it intraday. I'm keeping it light down here at 182.54 because of what I see as the likelihood for testing, I should say retesting, the 172.61 channel bottom by the end of next week or sooner. That sooner would come if we close today below 182.54. And then I think with that kind of volatility, if we settle today below 182.54, sorry about that. Where was I? Take us back to that chart. If we close below 182.54 today, we could actually tomorrow test 172.61. And by the way, yes, it still begins at 177 and a quarter. For those of you who like to scale into long positions, it does begin at 177 and a quarter, the 5/8 Fibonacci, and it ends at 171.79. This is a zone that, for instance, if you're short 3 to 5 day swing traders now below 190.59, you can take profits and reverse and go long. This is also 172.61 to 171.79, an area that 3 to 5 week swing traders can go long at, anticipating 212.80. And you near-term investors out there who like to hold Tesla for several months out, you could anticipate then 255.60 if you're willing to bottom pick 171.79. As I've said before, if we were to close the week below 171.79, it should be by a full 1% margin. Closing Friday at 170.07 or lower actually tips the market south aggressively as we move into the second quarter. The next 2 to 3 months then likely to yield this 100.79 to 101.81 region. So if that does occur, those of you who may have reached for 210 or 250 strike out of the money calls that don't expire in the weeks and months ahead, you should liquidate those calls and in turn reverse and reach for 101, for instance, strike out of the money puts that don't expire. I would go 6 months out, even though I only see it taking 2 to 3 months to play out. Let's go back to the upside one more time. Another reversal if we close today above 190.59. The market's on its heels, on the defensive through the rest of the week, below 190.59. But if we close today above 190.59, we are back in the bullish column near term through the rest of the week into next, anticipating then by the end of next week, 212.80, where we can actually top out, as I say, through March trade, fall back into the low 170s again within a month or so of doing so. It would be a settlement above 212.80. As I've said before, and I'll say again right now, that would then signal really a bullish continuation through March activity, then anticipating 255.60 again over the following 3 to 5 weeks of closing above the 212.80. Descending 1/3 speed line. I don't think there's really anything else that needs to be said. I will say this, if we push or open today above 190.59, the 197.36 level is in reach And once again, if we close today above 190.59, I don't see a good reason to be short Tesla. I'm talking to 1 to 2 week swing traders until we reach 212.80. And then you can sell the 1 to 2 week and even 3 to 5 week time horizon back into the low 170s. I'm going to leave it at that for Tuesday's Tesla. Please click like, share, subscribe. Check out wickedstocks.com for all of our twice a week stock picks, all of our daily triple Q and SPY analysis, so forth and so on. I'll be back tomorrow with Wednesday's Tesla, and you have a great evening.